Time to take a look at some of the inflationary trends that have emerged over on the east of the continent so far this year. And to do just that, John Mutua, who's an economist at the Institute of Economic Affairs, joins us from our studios in Nairobi right now. John, thanks so much for joining us this afternoon. Well, run us through, broadly speaking, the inflationary trend that has emerged in the East African region this year, where the price trend seems to have been downwards for the most part.
Yes. If you look at the inflation trends, actually, for the better part of, let's say, from mid last year to around June or April, around May this year, both overall inflation rates and underlying inflation rates have been on a downward trend. And I think this has been occasioned by two factors. One is the methodology that is used to calculate inflation was changed from an arithmetic approach into a geometric approach. Now, the reason for change is just to align, was for Kenya to align itself to international best practices, and also the fact that the arithmetic approach methodology adds an upward bias, especially when it comes to volatility of price changes. And the other reason has been mainly the fact that Kenya is now experiencing, I think from towards the end of last year, we're experiencing favorable weather. We've received quite a good amount of rain, and this has eased the shortage of food. So there's been an increase in food production, and so food prices have come down, and hence contributed to downward trends.
Well, that has been the general trend, with falling commodity prices and falling food prices as well playing a big role in the reductions we've been seeing. If we get country specific, though, in Kenya, year-on-year inflation's rate came down to 3.2%, and year-on-year the only cost to fall was that of communication. Just how much of an influencing role does communication costs play in Kenya at the moment?
It does play a critical role. Actually, communication initially was not factored fully into the basket of goods and services, but actually, from the revisions of the consumer price index, it has now been fully factored. And actually, communication is a major role. Plays a major factor in terms of actually it carries a lot of weight in the basket of goods and services when it comes to calculation.
Well, with that being considered more so now, John, is this inflation basket that we're looking at used to, used to actually calculate inflation, is that, in your opinion, now reflective of the reality on the ground?
I think, to a large extent it is, because initially the fact that communication plays a key role, especially in terms of the people's budgets, the household budgets, what one spends on communication, whether at a household level or even at business level. And the fact that it was not being captured was not reflecting the real figure for inflation. But now that it's captured, I think this gives a true picture of the inflation trends.
Well, for the East African region as a whole, John, there are certainly positives to look forward to, one can assume, where there's been much talk around the growth to emerge out of an East African community trading bloc. What do you see the formation of that East African community actually doing for inflation? Because there's got to be expectations then for quite a slowdown, with regional trade set to increase.
With the East Africa Common Market, I think this will obviously lead to movement of labor within the partner states of East Africa Community, and hopefully this will lead to increased economic activities all around. Of course, it could vary initially from one country to another, but now the fact that the protocol was signed, we're probably going to see, especially Kenyans professionals, also moving to our neighboring countries to offer their services, and also the other way around, and hence increased trades. So this is going to boost trade among the partner states.